today, is the consumer going on strike? Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news. Well, Australian retail sales unexpectedly fell in June, suggesting consumers are hunkering down in response to the Reserve Bank's 12 interest rate increases in 15 months. Overall sales declined 0.8% from a month earlier, compared with estimates for a flat reading, and it erased all their gains back in May. That's according to the latest data from the ABS. The weakness was driven by department stores in the main, plus clothing and footwear. This follows a 0.8% rise in May 2023 and a 0.1% fall in April 2023, so you can see there's a lot of volatility here. The ABS said retail turnover fell sharply in June due to weaker than usual spending on end of financial year sales. This comes as cost of living pressures continue to weigh on consumer spending. There was extra discounting and promotional activity in May, leading up to mid-year sales events. This delivered a boost in turnover for retailers, but that proved to be temporary as consumers pulled back on spending in June. There were falls across all non-food industries. Department stores were down 5%, and that was the largest fall, followed by other retailing down 2.2%, and clothing, footwear and personal accessory retailing down 2.2%. Household goods retailing also fell, down 0.1%, and that was the 8th monthly fall in turnover over the past 12 months. Food-related spending was mixed, with a fall in cafes, restaurants and takeaway food down 0.3% and a rise in food retailing up 0.1%, but of course that is a reflection of inflation raging around food from the supermarkets. Over the last 12 months, growth in food retail spending has mostly been driven by rising food prices, the ABS said. We saw in Wednesday's release of the Consumer Price Index that food prices rose again in the June quarter. Consumers are responding to those price rises by changing to cheaper brands or by simply buying less or paying more for what they currently buy. To see the full effect of consumer prices on recent retail turnover growth, it'll be important to look at the quarterly retail sales volume that are going to come out next week, the ABS said. Additional information on the June reference period, including quarterly price and volume data, will be released on the 3rd of August. Retail turnover was mixed across the states and territories, with the eastern mainland states all recording large falls. And by the way, the ABS has now reinstated retail trade trend estimates, and the trend estimates from July 2022 onwards show that underlying growth in retail spending slowed considerably towards the end of 2022, with only modest trend growth in recent months. So these results bolster the case for the RBA to stand pat on Tuesday for a second straight meeting, after the inflation data 2 days ago showed a cooling of prices. Money markets trimmed bets for a final rate hike this year, and the policy-sensitive 3-year government bond yield paired gains. The weakening consumption story highlighted by today's retail sales report means the risk is the RBA opts to pause again, said Sue Lin-Ong, chief economist for Australia at the Royal Bank of Canada, who pushed back her forecast final 25 basis point rate increase to sit possibly in the fourth quarter. The RBA left the cash rate at 4.1% earlier this month to assess the impact of its tightening cycle that began in May 2022, while keeping the door ajar to further tightening, being data dependent, of course. Retail sales are an important factor in rate decisions, given that consumption accounts for roughly 60% of gross domestic product in Australia. Swap traders now see an 86% chance for a hike this year, after fully pricing one in December ahead of today's report. For the August 1 meeting, markets now see just a 23% chance of a rate rise. The loss of momentum in consumer spending will weigh heavily on upcoming RBA decisions, said Sean Lancake, head of macroeconomic forecasting for Oxford Economics in Australia. After the promising CPI print earlier this week, we expect rates will be on hold in August. Friday's report chimes with downbeat consumer sentiment as households are being squeezed between high rates and still elevated inflation. And of course, there's a further headwind because a large number of mortgages that were fixed for 3 years at record low rates during the pandemic era are being switched to higher floating rates, with the majority due between July and September. The outlook for retail sales remains challenging despite strong employment, rising wages, increasing population growth, and house prices climbing once again. And certainly in our surveys, we see mortgage stress still building and rental stress still building when we'll update that statistic over the next few days. Thus, it is likely, I think, the RBA may pause again, despite the fact that, of course, in Europe, the ECB lifted rates, and in the US, rates also went up this last week. But we'll see. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.